bearish continuation trends can be a little bit difficult. And for this, it's going to be based on the momentum of the downtrend. And of course, we're going to identify the support and resistance of it. A lot of times we see these mechanically made pictures and they're perfect. But how many times do we see these perfect entry points on a down channel? In this example, it shows the extension happening in the beginning, which it sells off really hard. We call that Speedy Gonzalez. Arriba, arriba! And then at the end, we see what we call the wedge pattern formation as price consolidates before making an uptrend breakout. So in this portion, the Speedy Gonzalez is in the middle, and that's pretty typical. Why is it typical? Well, just think, if you had an uptrend over here, then you had a consolidation until it broke this low right here, you weren't really sure of the trend direction. I mean, it could have gone up from here, but since it went down, everybody realizes it's a downtrend, and so the huge sell-off happens. So when price comes up into this area, you're not really sure if it's going to go up or down. Bears and bulls are fighting it out. And so I call this the plateau area because price pushes against it, but it has a little bit of resistance. And then the end of the channel again has a wedge formation before breaking out, making a new trend direction. Uptrend, accumulation. Not always. We'll see the plateau where price doesn't go any higher, making the lower highs that we're looking for to confirm that downtrend. Once you have the breakout, you get a little sell-off, and then the arriba, Speedy Gonzalez, down, down, down. And this is a 9-step, and of course it is absolutely 100% the whole thing, Speedy Gonzalez, with no real plateaus anywhere, giving that resistance level a hard time. Possibly a wedge formation at the bottom before making a trend reversal. Here we have an uptrend, then we have the consolidation, and in that consolidation, we have a plateau area. Price never goes above. It gives us equal lower highs, indicating that the strength of that trend is over and going to start going down. Once we break the low, we get into the Speedy Gonzalez, and at the bottom, we get a wedge formation. Another picture, just nailing this down. We have the highest high. We have a lower high. We have an equal lower high. Give us a nice plateau line. Price never comes above. We also see a plateau line here and maybe across here. Then once they confirm the trend, you get a Speedy Gonzalez, which makes the impulse wave. Then what do we see? We see this outside channel giving us a great entry for a continuation pattern. Right here, you can see the W, and now it's sold off, making a wedge pattern. And we would understand that this bottom right here would be a breakout. And I love these little tweezers. They are a huge indication of a double bottom because as you can see, price pushed up, bulls are ready to buy. Here we are, uptrend into leg 5. You're making lower highs. But as you can see, there's a lot of congestion here where price just kind of comes back and forth across these highs, not giving you a very big move. Then after you break below this consolidation, you get a Speedy Gonzalez. Arriba, arriba! And this pattern's called an 8-wave bearish cycle on the Elliott wave. You see that we're already off of the highs, and then you start to formulate this plateau pattern before price goes lower. Here's another picture, uptrend into leg 3. Get into that trade, thinking it's going to reverse, makes an up thrust, giving you a higher high or head of a head and shoulders pattern. And now this is the highest high, and you get this plateau pattern over here on the side. Like a normal head and shoulders pattern would be right here. So when you start getting the secondary up against resistance, it doesn't really make sense. You're like, oh, this wasn't a true head and shoulders pattern. And you're right. This is called a Wyckoff. And a Wyckoff consistently shows this plateau pattern. Price never goes higher, making new highs on most of its patterns, but on one. Typically makes a high, lower high, equal high, and then a big sell-off where, that's right, after it breaks support, which gives you a huge Speedy Gonzalez down, and at the end, a wedge formation, uptrend, and the plateau this time starts first, then makes a higher high into the big sell-off after price breaks here, and as typical, the wedge formation comes at the end. So here you had the plateau, then the higher high, giving you the Wyckoff, or it could be a broadening pattern, right into a Speedy Gonzalez. Price kept going lower, and now you start seeing the wedge formation. So I just want you to understand when doing trend continuation patterns, you have 3 touches here, could be a head and shoulders pattern, before going into a Speedy Gonzalez, then a wedge formation, before a trend reversal. Or like this whole move seemed like a Speedy Gonzalez. Really not giving any plateaus where there's multiple times it hits the high before falling off. Then let's zoom into the last area, Speedy Gonzalez, into a wedge formation, then the breakout. So here's one thing I want to talk about is when you're in a downtrend and you start seeing the plateau, that's the wrong place to see the plateau to take a trend continuation pattern lower. You want to identify plateaus when you're at highs so that you have room to sell off. Here we have the highs, plateau, room to sell off, plateau, room to sell off. Then you can see price making this wedge formation before popping out. Uptrend into the high, makes a lower high, and then look at this plateau before selling off. Wedge formation down, and it broke out. So now you're at highs again, making a plateau, and so you would anticipate that this would also be a plateau, getting ready to sell lower. A lot of times we think make the down channel. As soon as we break out that down channel, enter into the trade. And this is why you wouldn't want to enter for lower, even though it did fall off. It wasn't equal in value of falling off this much. But a Speedy Gonzalez doesn't indicate a reversal pattern, wedge formation, or the break of a very low plateau before entering into the reversal pattern. Here we have a high, lower high, plateau into a Speedy Gonzalez. Broadening pattern formation at the high, Speedy Gonzalez. Now a plateau, and we can see prices selling off. These are the highest highs. These are equal highs. And until price would come above these highs, make higher lows, we have to stay bearish on this trade. Here we have a Speedy Gonzalez potentially going into a plateau. Price comes up to here. This is where we enter into the trade. High, lower high, Speedy Gonzalez, wedge formation, breakout. And I just wanted to highlight this because a lot of times when we're in the wash of this distribution, you say it made a plateau in the beginning and then another plateau. But once it broke this point, it sold off very quickly. Then went into a wedge formation. And so from here all the way down, there's really no entry signals for you to get into this trade to take it lower. All of the signals for this trade are up here. Yes, the time it takes for this thing to go sideways before a big sell-off is frustrating. But what do you see in any of this move that would make you want to enter into this trade lower? Remember this biotech, huge up run, highest high, lower high, plateau. And use these equal highs as buys into the Speedy Gonzalez. That's where this system can be so amazing. When you get in on leg 3, double down on leg 5, get in on a continuation pattern, and even again. Just because you understand what you're looking for, always getting in at resistance, no matter if the trade is going up or down. Resistance, resistance, resistance. And that's the thing about Speedy Gonzalez. There is no resistance. No place to get in. Uptrend, double top, plateau, lower high, equal highs, plateau. And if you were getting in here, there is a possibility that can go against you. So when looking at Citigroup, leg 3, leg 5, head and shoulders pattern that should have worked, but now it's making a plateau. Where do you think this will go? Lower? And that's why I picked AYI, plateau into a breakout. DVN up against resistance. Notice last time it made a high, lower high, plateau, and then sold off some more. MRO up against resistance, great place to take a trade. But last time, if you entered at resistance, it made a plateau, then a spike into a Speedy. Knock, we have a plateau and a spike. Do you think it's going to sell off from here? Me too. And SC, high, lower high, equal high, making another attempt at this, great place to place a trade. Last time as it sold off, it went into a Speedy Gonzalez. I just got to point this one out because this is the perfect 3 drives method. RSX, you see from these highs before the sell-off, make a range box. Once price breaks out, apply that range box. Price went right to the top of that range box, then sold off. Once it broke out again, 3 drives method, apply the range box again, and where are you right now? This is the perfect 3 drives method, range box duplication into a trade. What do you also see? That's right, a plateau. So price should sell off from here, go lower, find support, then come back up and retest that plateau before going lower. Just get your eye honed in on finding these plateaus. Uptrend, highs, made a plateau. And sometimes you're just going to find a lot of plateaus. And again, which are just absolutely fantastic places to buy trend continuation lower trades until they come into support and take your profits. Another way is let your runners run, range box duplication. You see price came right down to that. And or over here, range box duplication, and you can see price came right down to that, making a Speedy Gonzalez against this resistance level. Hope this helps.